Hi and welcome to the Market Alert for Thursday, the 30th of October 2025. So Trump is flying home from trade talks with China and reveals how they went. This is only 21 minutes ago as I'm recording the Market Alert. So obviously trade deal's done. Trump looks very happy about it. I can't say the same for Xi. He doesn't look too impressed at all. So I think the photograph says more than the headline. Fed cuts 25 basis points, ends QT as expected. Two FOMC officials dissent. Yes, one wanted to keep rates unchanged and the other wanted to cut by 50 basis points. So they both stepped down as far as that's concerned, as far as that vote was concerned, I should say. Stocks, bonds and Bitcoin battered after Powell trapdoors market, says December cut not set. Powell starting to have some fun with the markets in his last months on the job. So he's obviously going then. He's done his tenure and term. So that's an interesting one. So he's probably going to leave a bit of carnage when he departs then in the new year. So yeah, stocks and bonds, Bitcoin battered after Powell trapdoor. The trapdoor is that it's not going to be a one-way bet that rates will be cut again in December. US stocks were ultimately mixed while treasuries and the dollar climbed after the Fed cut. Well, they climbed, the dollar climbed, and the yields, purely and simply because the trapdoor, that there may be no cuts. And if there's not going to be a cut, that's a positive for the dollar, which I thought was odd when I looked at the charts last night. I couldn't figure out why the dollar was up. So dollar and yields rally as Powell pushes back against December rate cut. And the Goldilocks melt up in equities will continue. Goldman traders address the three bears. So the reason for that is funding spreads are not stretched. CTA signals remain positive. Gamma is not a headache for at least another 3 weeks. Buybacks are back, I should say, which I mentioned yesterday, didn't I, with regards to the numbers being reported over the next few weeks from the major seven, and we are now almost past the US mutual funds selling on the back of fiscal year end. So again, this all comes back to the retail investor, doesn't it? And I think there's one more headline. Yeah, market liquidity turns critical as Bank of America says room for Fed to restart the balance. So you've got all of the retail buyers waiting to chuck money at the markets, and also the Fed making statements. We've seen room for Fed to not only end QT in October, but to restart balance sheet growth. So that's QE. What did I say yesterday in the alert? Without a doubt, QE is returning, which again is negative for rates. It's good for the metals. So we'll just have to wait and see, won't we? But the December rate cut that was already in the bag and is not necessarily so now is going to be a determining factor with regards to this. If they cut rates and then into 2026, you're going to see the return of QE. And don't forget, the US debt now is 38 trillion, I think. Let me just double check this for you. I think we're into 38 trillion. And indeed we are. So you can see it there. We've got 38 trillion of US debt. Wow. And predicted by 2030 to be over 50 trillion as well. Well, not predicted, forecast to be above 50 trillion. So I don't know how it all keeps going, but it does. And now we're going back to kicking the can with QE again coming in 2026. Other economic news for today. There's no US news. Like I say, we've got this news, obviously, of Trump. And I'll just bring that down a bit so you can see it. We've got Trump said the meeting with Xi was amazing, outstanding. Trump on China trade deal, in agreement on many elements. Trump reduced fentanyl tariff to 10% effective immediately. Soybean purchases starting immediately, and Trump agreement on soybeans as an AG products. That's ag products. That's agricultural products. So yeah, let's see what happens. I mean, I think there's a lot of hyperbole here, let's put it that way. Anyway, over to Europe today. Nothing for the US. We've got German prelim, Spanish flash, German GDP, and then we get to the refinancing. I don't know why they call this. Why just call it interest rates as opposed to main refinancing rate? This is to stay the same, is what is forecast. And then Lagarde's coming out to charm everybody at 145. Right, so let's have a look at the markets and kick off with the Dow. So in the Dow, we can see we've got another all-time high for yesterday. No surprise there. As I mentioned in yesterday's market alert, we would do that. We'd also go to the 48,000, which we did. We're below that now. We've got a new all-time high, big psychological number. 50,000 by Christmas, I would suggest, given the news headlines with the money still sitting on the sidelines from the retail investors. The only thing that will stop it, of course, is going to be the fact that Powell has thrown a spanner in the works with regards to what was deemed to be a given in December. We'll be cutting rates further by another 25 basis points, but that's not to be the case. So you can see the market moving lower off this. There was some selling that came into the market, and at the moment the prices are sideways as well. You can see the market's reaction here. We moved up nicely in anticipation of the cut-in rates, but that, like I say, the spanner in the works is he's not guaranteeing a cut in December before he leaves office. So at the moment the market is sideways and sitting at yesterday's close, but above yesterday's low. But I'd expect a bit of weakness in these markets given that change of heart by Powell when they actually open. So in the German DAX we remain sideways. You can see that defined sideways range now. Very messy at the moment, not making any attempt to catch up with the US. May be different after Lagarde speaks today, but at the moment the market remains range bound. 30-minute chart, so we moved up, and we had a couple more of attempts to try and move up, but then we moved lower, and then we got the shock of Powell, and the market then moving back up to the 200 MA where it's failed, and then all the way back down. You can see there with the buying coming in, supporting the market at what was the retracement here? Probably about 62%, is it? 78, just there. So you've got 78% retracement with the buying coming back in to support the market and trying to move higher and get back above the DP there overnight. Back to the US, we have a new all-time high in the S&P made overnight at 6,921. Like I say, 7,000 really is on the cards here, isn't it? Also for the S&P, it's got more chance than the Dow going to 50,000 because of the broader, well, sorry, not broader, because of the Magnificent Seven that are also aligned to this, particularly Nvidia. So again, and of course the others in the Nasdaq as well, any other tech stocks. So it's an interesting one to see if this actually manages to do that. So 6,921. Looking that way though, a bit of selling around overnight as well, as you can see with the volume. 30-minute chart shows that selling there, but the market currently finding support at the DP. As I mentioned earlier, expect a bit of selling in these markets when they open, but yesterday very sideways for the S&P until that announcement, but we soon came off the low of Tuesday there. So in the US dollar, the market's up yesterday. Couldn't understand why, but totally understood after reading a few bits and pieces on zero hedge. And of course, that delay in cutting rates or not cutting rates in December is the reason why the US dollar moved high yesterday. It adds a bit of strength to the currency. And overnight, though, the reality is maybe they're not going to, because the dollar was being down, but it's trying to fight back a bit there at the moment. Right, let's have a look at the metals. And not a brilliant reaction. Market up yesterday, and overnight prices sideways. The fact that he's stated that he's not going to cut rates is, or couldn't, or may not cut rates in December is not a good sign for the metals, because they can use that to hold the market to the downside now. Maybe that's the reason why he's done it, because of the interest in the metals, the moves that they've made. This way you can just sort of put the brakes on this for a while. So I'd expect sideways to lower going forward. And you can see that in this chart as well overnight. Market sideways to lower, not making much progress. And any other news to try and slam the price back down will be used for good effect as well. That's how that's looking at the moment. Gold, let's have a look. Sideways there, it's doing 89% retracement at the 78 in the bigger picture. So a bit more support there, bit of buying demand there yesterday as well. But I noticed that the Korean central bank, South Korea that is, are buying gold at the moment with the drop in price. They've not bought any since 2013, I think it is. So that, again, central banks are just piling in behind the scenes. That's the idea of ramping the price to the downside, is so that they can buy cheaper. They have the tools to do this. It doesn't matter about their position limits in the futures market. It's ignored. The CTFC is on holiday at the moment with the government shutdown. There are no COT reports either. So on that basis, they can do whatever they want. That's why this happened. For my money, gave them the opportunity, and it was a perfect storm to do it. 30-minute for gold. You can see there that, not cutting rates in December sent the market lower, and you can see the low being tested again on the overnight there. So it's that bar there. And the one before it with the demand is the green bar, so you can see some demand coming in. Needs to get above the DP though in order to move higher. So have a look at the gold silver ratio. So for the last 2 days this has managed to move slightly lower, but starting to move back. Like I say, the gold market is going to be the focus of moving back to the upside, but silver I believe isn't going to follow as fast. If it does, we've now got this situation hanging over the market with regards to whether there's going to be a cut or not. And as I said earlier, it's going to be used as a tool to move the gold and silver prices lower. We'll just have to see how quickly the market forgets about the statement, but obviously it's fresh in the minds of metals traders for today. Right, so have a quick look at the DAX trades for yesterday. So in the German DAX, the market up in the pre-market, and you can see there we get straight up at the open. The pattern's changed there slightly. They did try and get people to go short there, and you can see the support to the left. There's buying down here. Market then moving to the upside, and then price is putting in the sell signal, the trade down to the close. A second sell signal follows, and then that was it until we had the buy signal at the close. You can see the two previous occasions where the market had actually held at that level. So we bounce off that, and then we move back down to test it once more, and I think we bounce off it again, and you can see there, so the close very important until we break it after the 10 o'clock cut-off period in the morning, until the market then uses it once more and moves off, and then in the afternoon it doesn't, as it moves lower with the Dow. And there you can see there's a potential buy signal, but I'm afraid the US had a different idea. Market was slammed, and then you'll see there again just down at the low, and the S1 where the buyers come in to support prices until they continue lower. So they hold. This is not uncommon either. You can get trades just below these points at the low, so if they're retested you can take advantage of the follow through down to the S2 there. And then of course we headed off into the evening, so I left the recording on, and there we get the cut, and then we get the comment about the rate cuts not happening in December, and there you can see the net effect. So it was the press conference where the news was released and sent the market lower. The rest was just a given, because we knew, and I've always said in the last few market alerts, it's already priced in, and the market then moving sharply lower. But let's see where we are overnight. So that was yesterday. Today we are sitting at the DP and the close. Let's just squash the chart down a bit, see where we are in relation to yesterday's range. There's the high, there's the low, and at the moment we're sitting on the DP, so we need to see the market make a concerted effort up to the high. That may be helped at lunchtime with Lagarde, but we'll just have to wait and see there. Right, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.